Let me share a story. I think this was 2015, Beijing, China. I'm giving a speech in front of a lot of people, 1,000 plus. Gosh, I think it was 2015. I'm not sure. But I met Larry Williams, the trader, for the first time. And he was the only other person there that was a foreigner, a Westerner. So it was him and I, and a chance to meet with so many different Chinese people, primarily middle-aged Chinese ladies who, from what I was told, as their husbands worked, they were responsible for the investing decisions. So this conference of thousands and thousands of 50s, 60s, 70s grandmas responsible for making the investing decisions. But I must share that the owner of the event, the guy that was holding the event, and he was a dentist by training, but had somehow or another got into holding investing conferences. So he invited Larry and I to dinner. And I may have shared this on the podcast before, but I don't think exactly how I'm going to say it. This guy invites Larry and I to dinner, takes us to dinner, a local Chinese place in Beijing somewhere. And there wasn't anything on the table that I recognized. Fair enough, that doesn't bother me. I assume it was mostly tripe type stuff, stomach, intestines, etc. Larry was not exactly happy about this and was not as adventuresome as I to try things. After dinner, the main guy, he decided to take Larry and I to a famous park in Beijing. I don't recall the name, but it was quite beautiful. And we were walking around, and all of a sudden, man, I got to tell you what, it hit me. Whatever I had eaten, it was, where is the bathroom? I better find it right now. In the middle of this park, where I didn't see a bathroom for as far as the eye could see. That's as detailed as I will get. Let's just say there was a close call. But man, I got to tell you what, that was a funny, funny trip. It was quite fun to meet Larry Williams. And I'm pretty sure my meeting with Larry was after the podcast episode I'm going to replay, my interview with Larry Williams on this podcast, which goes back to 2013. But I will guarantee you, if you've not heard it, you will find pearls of wisdom that are relevant and timeless. Because that's what I do here. I'm not Mr. Topical Events. I'm the guy who has programmed a podcast since day one to be timeless. Now, of course, there may be some issue brought up in one of my interviews that is dated. But the principles, the philosophies, the understandings, the examples, timeless. So without any further buildup from me, without any further horror stories of Beijing food gone wrong, let me share a replay with you from Larry Williams, the trader. And again, if you can't find something in this conversation that spurs you on, that motivates you, that informs you, that inspires you, please quit now. I hope you enjoy. Today on the show, I have Larry Williams. Larry is a trader and Larry is an author. Larry has been in the trading game for a long time, over 4 decades. His name is very well known in almost all trading circles. I hope you enjoy this conversation. Hey, Larry, how are you?
Pretty good. You're in Singapore? Where are you?
I'm in Saigon today.
In Saigon. Oh my gosh. One place I've never been. I always wanted to go there.
Where are you right
Virgin
now?
Islands. Virgin Islands.
You sound FM radio good, considering we're probably about 8,000 miles away.
It's amazing, isn't it?
It really is. It really is. Hey, listen, I want to jump right in because as I was preparing for this interview, I do all my Larry Williams homework searches and all this kind of stuff. And the headlines that dominate in the last at least couple years are really about the title of your most recent book. I wonder if you might address that, because what's interesting about those headlines, these IRS headlines that you faced, is that it's really the beginning of the story and the headlines don't reflect the end of the story.
Yeah, that's true, isn't it?
And I think the really interesting thing, and I'll let you expand on this too, is that, and I've not had a chance to read this book, and you can expand on it as much as you want. I think I'm going to go read it for sure. But the idea that when you had gone through this whole process, you ultimately said, and I'm paraphrasing, I can only put so much blame at the feet of the IRS. It's really about Congress. Is that a paraphrase or is that close?
Since the book has come out, what we now know is the IRS has targeted specific peoples and groups. And I was indicted, and we'd been in touch with the IRS for years trying to work everything out. I was indicted the week that my daughter was up for an Academy Award, the Academy Awards week. And I was a great poster child within the industry, the fact that I was in Australia and she and Heath Ledger were a couple. And I had been in the United States before. Why was I indicted in Australia? I could never figure that out. But now, when retrospect and knowing that the IRS has been a rogue agency for a long time period, some pieces of the puzzle fit together better now. So do they target people? Sure. Was I high visibility with an industry? Yeah. Is it an industry they want to scare? Yes. So I was a great target. I was a poster child. So so whose responsibility? And ultimately, we should have a different tax system, and that's Congress's position. The IRS just enforces. But the way the IRS enforces things leaves one to question their reality.
You raise a great point, and I think everybody in the audience knows that there has been targeting, and I think it's a matter of public record. You raise a really good point.
Yeah, and clearly, in my case, I followed the advice of some lawyers and CPAs who were pushing the edge of the envelope, but they were Price Waterhouse guys and, lawyers, and they said, do this and you'll be okay, and I did that. And assuming for a moment the IRS was was correct in their view, and I was wrong, there's no mens rea. I was doing what professionals told me to do to minimize my tax obligation. But the IRS would never listen to that viewpoint in negotiations prior to going to trial. Never, ever, ever. It was only, do you want 6 years in prison or do you want 3 years in prison? What type of deal do you want to cut? And I said, I'm not going to cut a deal. I'll go down swinging one way or the other. And eventually, of course, when all the charges were dropped, every single charge was dropped, they finally had a realization in trial that they couldn't win the case. And so on the third day of trial, they said we could see them texting back and forth to Washington, D.C. It was actually kind of funny. And then they wanted to recess, and they made an offer, and we talked and came back with it and eventually said, okay, this is what we'll do. But their unwillingness to negotiate with me while they were with other people, I think just reinforces the targeting aspect.
Yeah. I mentioned to you in email, and I've not talked about this in my podcast, but I had a case in Virginia that went on for nearly 5 years. And in hindsight, it's very difficult when you really know you're doing the right thing, you really know the government is overreaching. And so I relate to the idea, and I'm sure many people, unless they've gone down this path to standing up to the government, you can't really truly imagine what it feels like to take a, quote, good fight forward, or to try and do the right thing, or to have not done anything wrong, and then to be on the other side of a behemoth that has unlimited spending power. Even at the local government level, they can hire whatever attorneys they want, and they pay whatever bills they want. It's amazing.
Yeah, somebody estimated they spent about $6 million on it. We spent maybe $2 million in my defense. And I've taken one case all the way to the Supreme Court of the United States, which we won. We took one all the way to the Supreme Court of Australia. We won at the High Court and lost on a split decision at their Supreme Court. People don't realize, I think, two things: enormous cost, and as you pointed out, the time. these things go on and on and on, and it just drags on your psyche. They just don't sense that. And the government will send out all sorts of news releases. We've indicted so-and-so, what a bad guy is. But after all charges were dropped, the government has yet to do a news announcement saying that we dropped all the charges. They refuse to do it.
Right there is the most telling example, and I'm not putting words in your mouth, but to me, it's the most telling example that it is personal. Because if it's the government and it's objective, if they want to announce the charges, then they should be willing to do the exact opposite when they're wrong. And when they don't, it tells you it's personal. And when the government's personal, that's scary to me.
Yeah, it is. We tried to not make it personal against the fellow who was prosecuting us, but either he had directions or he did take it personally. I don't know, but it's you can get destroyed in the media, and then everyone forgets about it, and so that's the story. But when you're victorious, that story never comes out. And that's really the responsibility of good journalists.
Well, the book is called Confessions of a Radical Tax Protester. So for those folks that want to check it out, and for those folks that are tuning in and expecting us to jump right into trading, I frankly, like I said, doing my research here today, I wanted to make sure I kind of discussed this right out of the gate because it did make a lot of headlines. And I did notice that your daughter's name got tossed into it. And that's kind of, it's unsavory, right?
Yeah, but it's what is.
Yeah, it is. It is.
This is America. This is what they do. You have to learn that's how the game is played.
Yeah.
And you have to have a strategy to deal with that, an emotional strategy as well as a legal strategy.
Yeah, well, you seem pretty calm, cool, and collective about it. I might have had more of a meltdown.
Well, I think years of trading helped.
So listen, let me jump in, and I want to go back to your very beginnings because I announced to my Facebook that I was going to be speaking with you, and it is interesting. Your name, you have so many people that when they hear your name, they are just interested. They want to hear what you have to say, and they get excited. And I'm still a novice to some degree. I'm a newbie when it comes to Larry Williams, but I want to jump in and let you go back to the very beginning. And I've seen you give some comments about this before, but I want to let you discuss how you even decided to approach trading and what were your motivations?
Well, it began in 1962. I was looking at a newspaper and I saw that a stock was up 0.1 or plus 1. I had no idea what that meant. I come from a working class family. We never owned stocks. And so I said to a friend of mine, what does that mean? And he said, well, if you would have bought that stock yesterday and got out today, it would have made $100. And back in 1962, that's probably like $3,000 today. And I go, wow, this is for me. You can just guess and something goes up and make money. That's really attracted me. So it was just pure. I'd seen my dad work real hard in an oil refinery all his life. And he always said, learn to work with your head, not your back, like in his hands like he has. And I thought, wow, this is interesting. You just make money looking at a newspaper. And of course, I thought it would be easy. And of course, I've come to find that that's not correct at all. But that was just pure greed, what first interested me in it.
Let me take even a step back further. You grew up in Montana, right?
That's correct.
So I've not had a chance to visit Montana, but I think people hear Big Sky and they know it's a massive state. How did growing up in a state like Montana, which is a state of resourcefulness, a state where you probably have to take care of yourself a tad bit more than growing up in a big city. There's a lot more that you have to be aware of and take care of. It's the life in being I don't want to say the country, but just a more rural growing up. How did growing up in Montana affect you personally?
Well, I think first of all, that's probably the most insightful question I've been asked in any interview. I've never been asked that before, but I have cogitated on a bit. And I think two things. First of all, as I see kids growing up in a big city, it's hard to be really creative because your mind doesn't just flow in the mountains and the streams and hiking. And I think you can get much more creative growing up because you learn to create stuff in the environment and see it change. So I think that's been very helpful to me. And the other thing is that everybody in Montana is hardworking people, or at least it was back then. And you really treasure money and hard work and a work ethic that says, I used to ride rodeo, and you're going to get bucked off and it's going to hurt, but still you get on and hopefully you can hang on and you're going to win. It's kind of like in the markets, really. You're going to get bucked off, but if you stay on, you win some money. and you pay to ride rodeo, and you get bucked off, you don't get anything. And it's kind of like the market as well. So I think there was that general idea of entrepreneurship, though my father worked for a large oil refinery all his life. My grandfather had a grocery store, and maybe I got the entrepreneurship from him. But just the idea in Montana, it's not only the big sky country or the treasure state, but it's big thinking country. You just, it's amazing the people that have come from Montana, the things they've done, in part because I think they have that very open mind about, hey, I can do whatever I want to do.
Well, and you've done that. I mean, back in the 1970s, I believe you were the Republican nominee for Senate on was it 2 elections?
2 elections. I lost to Senator Baucus, who went on to be head of the Finance Committee, and Senator Melcher. And unfortunately, I chose to run against incumbents, which is really a tough position. But occasionally, they get knocked off. It was a great opportunity to.
I know I'm bouncing around here a little bit, but you've got such a varied background, so you have to excuse me. Look, here we start the podcast talking about this most recent issue that you had this battle going on, but politics is the ultimate battle in the government. So here you are running. How did you decide to put your name in the hat ultimately? I mean, what were you thinking to yourself and say, I'm going to run for Senate? What was going on in your head? What did you want to get across to the people? What did you think you could do better than the guys that were out there?
Well, in terms of the Republican primary, I actually called the chosen guy who was running for the Senate, and I said, "Hey, Bill, I'd like to know where you are in your positions on a couple of issues. Maybe I could help you." He said, "Well, I have a committee that will tell me my positions on the issues," and that just turned my stomach. I thought, "What? You don't know your own positions?" That kind of was a triggering agent. And then, be really honest, one night my buddy and I were driving Montana back from someplace, and we stopped and had a couple of beers. And about 5 beers later, he figured out that I should run for the U.S. Senate, and I was too dumb to disagree with him. It was really all about less government. It's the same issues today. Nothing's changed. We should probably have balanced budgets. We should probably have less government. We talk about that we may run out of money for Social Security, but we never talk about running out of money for welfare checks. But like this whole system's out of balance. I had seen too much government interactions with the SEC and CFTC and in my business. So I figured, hey, you know what? Montana's got some problems. I understand futures, future price, wheat, cattle, oats. So I felt that I could represent the average voter better than the other guy. And that's what got me in the office running.
So a quick story about me. When I was 21 years of age, I was living about 15 miles outside Washington, D.C., in a small town in Virginia. Today, one of the wealthiest counties in the country based on the numbers of federal employees living there. But when I was 21, I actually ran for mayor of the community I live in against a guy who was 72. And I have to tell you, putting myself in the spotlight at such a young age to be involved in politics, and it was a serious type thing, that changes you. You either continue with it or you say, you know what, I've had enough. I'm going to go do something else with my life. And I said I had enough.
Yeah, I can certainly relate with that. I think there's a point where if you're heavily involved in the political process, I was regional director for John Connolly's presidential campaign, worked on Ronald Reagan's campaign and Jack Kemp's. I mean, you did a lot of Iowa primaries and stuff. And after a while, you kind of say, you know what, enough. It's like in boxing, protect yourself at all times. I got to protect myself, get out of the ring here, make certain these guys, don't continue to screw up my life. And that's one reason why I'm in the Virgin Islands. It's great tax structure here, a lot of freedom here. We're part of America, but yet it's different than America.
Yeah. Well, let's jump back into trading. This is what most people want to hear. They want to hear your insights. And I want to go back to some of the beginnings and maybe let you elaborate on a word that I love. And it's often a word that is, how do I say this nicely, bastardized in common parlance, but the word speculate. To speculate is an awesome endeavor, in my humble opinion. How do you feel about it?
Well, yeah, and if we go back to the Latin root for the word is specular, which is to see, like glasses, spectacles, right? And the difference between a speculator and a gambler is we observe things and make certain references and then determine what the future should be. So we're not gamblers. We're actually making observations, and based on those observations, we're correct or we're not correct. And it's interesting. The other day, somebody saying, "Oh, you speculators drive up energy prices," and they're all upset about speculators. Okay, I don't think they do. But if they do, What about when energy prices collapsed a couple of years ago? Do speculators get credit for that?
Hey, don't ask the obvious question. Don't ask the obvious question.
They only look at it one way, and they don't really realize that if we didn't have speculators, the markets would be much wilder than they are.
Yeah. So why don't you continue on this thinking? So you're in Montana, you're a young man, you're wrapping your idea around trading, you're seeing starting in stocks. How did you make the migration to thinking about commodity futures? I mean, I naturally, I think, and I've talked to Salem Abraham, who's a trader out of Texas, about this, growing up around cattle and whatnot. I think it's a little bit different than kids that might grow up in the city. You actually see and understand some of the mechanisms for the buying and selling of animals at a young age.
When I understood math, a broker told me that I could get, without having to pay interest on a margin account, I could control $30,000 of pork bellies for $500, or I could buy $500 of stock where I get my biggest bang for my buck. And once I had that realization, I thought, well, futures is a lot more attractive in terms of what your potential is on the upside, and of course, on the downside as well. But that was the really switch point, was just the economics of it, that I got a much better deal, and that there's real demand and supply for corn and wheat and gold, and there is no real supply or demand for IBM or Apple or Google. I mean, you really don't need a share of Google. You can live the rest of your life without it, but you can't live the rest of your life without wheat and sugar and coffee and corn and gold and silver and all these things. So we have real data about those markets, real fundamental data that we don't have in the stock market. There's no true demand for them.
How did you start to put the pieces together, though? Because for the average trader, for the new trader, even for the established trader that's out there, there's a lot of different factors going on. So you have the emotions of it all. People just getting excited. They flip on CNBC and there's 6 suits jumping up and down, and you start jumping up and down, and you call your broker. But then there's the issue that you brought up with the leverage inherent in commodity futures. If you don't have risk management, if you don't have a money management strategy, you can end up in a bad place fairly quickly. So how did you start to put the pieces together about the emotional part of it, the money management part of it? I'll let you continue there.
Well, I guess I was lucky. There was no CNBC when I started. So you didn't have all those things pulling at you. I really just got into the first book I read was Joe Granville's book. And later on, Joe, who unfortunately passed away a month ago, became a friend of mine, both he and Karen. His book was very inspirational about, there was logic to this business called stock trading, but it was all technical. And I traded as a technical only guy for probably almost the first 10 years. And then I met a guy, Bill Meehan, who had been a member of the Board of Trade, who was really into the fundamental aspect and taught me the fundamental aspects of markets. And we came together, 2 guys, Keith and Kevin Campbell, who run one of the largest funds now in the world out of Baltimore, had been a friend of Bill. And it's really interesting. Bill was the inspiration for a lot of guys. And what I got from Bill was that markets get set up for big trend moves. Technical stuff will call all the trends, but you get whipsawed to death. So what you want to do is put a trend mechanism on top of a fundamental conditional setup market. Then trend isn't just hoping that one of these things goes up. You, as a speculator, you're observing that this time, this trend change should be better than just a 20-day average crossing a 10-day average or whatever. So that was the total perspective Bill gave me, the conditions set up markets for trend moves. And his problem, why he came to me, why we worked together, he had no clue about technical stuff, timing. Technicals are all about timing, but you don't know if it's going to be a massive move. You don't know the magnitude of the move. Just because you get above a 50-day high, it doesn't mean you won't go right back down. But if the fundamental conditions are there, then the trend change is much more sustainable.
I have to admit fully, and I think you probably know this about me, I am not a fundamental guy, and I can't add any value there. I can appreciate that there are definitely people on this planet, and I think you've had some experience there for sure, who have been able to pull it together. I know Ray Dalio, and I sometimes want to know what his secret sauce is, but Ray Dalio swears, I don't know if he swears, but he says that he trades only using fundamentals, but trades them systematically, which was intriguing to me.
Well, when we were roommates together many years ago in New York City, I think he scoffed a little bit at my technical stuff, and I scoffed a little bit at his fundamental. It wasn't until years later, that I haven't even seen Ray since somewhere in the 70s, that it was really interesting. We both pop up again with a little different trading style, but clearly, I think fundamentals are the basis for the magnitude of moves. And I know students of mine who now manage money have taken my work. This is exactly what they've done, what we've always talked about. They'll take a turtle channel breakout, but only if there's a conditional entry there. And of course, then you don't have to wait for, say, a 20-day high or a 50-day high, because if the conditions are there and they're ripe for a significant move to the upside, then you can buy at a shorter time period high or moving average or whatever your technique is, because the stage is set for a big up or a big down move based on the fundamental conditions of the marketplace. I don't disagree with trend following. I think it just has to be used selective. I don't disagree with using a hammer, except you got to find the right place to use a hammer.
Yeah, there are different approaches. I think sometimes what I do, and people get into debates with me, I've enjoyed being in the trend following world because there was so much data to observe. As a young man coming into it, I could see all this data and observe it. On the flip side, if I picked up Seth Klarman's Margin of Safety as a young man with a political science background in my early 20s, that was a much more difficult proposition for me to wrap my arms around.
Well, margin of safety, I think that's one of the incredible learning experiences that I went through, and that maybe every trader eventually has to face. And that is the risk control aspect of this. It doesn't matter if you've got the greatest system in the world. If you don't learn how to control and bet size and manage your account, you really have to manage the markets, your trades, you have to manage your equity, and you have to manage your emotions. You've got to really touch on those three legs if you're going to be a successful trader.
Well, I brought those up a second ago. So why don't I let you expand on the phrase money management? Because even though people have heard it, it's not something that resonates with a large segment of the population. Many people, you could take a doctor, an attorney, a young man out of college. It's a subject that's still, you've been at this for a long time. It's a subject that's still in the weeds. It's still hidden away. The idea of money management, bet sizing, position sizing, however one wants to call it.
Well, I'll make it real exciting here. I took the $10,000 to $1.1 million in a real-time trading championship because of money management. My daughter, when she was 16, took $10,000 to $110,000 real dollars in a trading championship. And a lot of my students have done this similar thing or comparable. Nobody's got our records yet, but they're trying, and they do really well. And it is, sure, they're decent traders, maybe even good traders, great traders, but it's the money management that gets the exponential growth of the account. But that sort of has two sides to it. And really, to simplify it, it's that trend is the basis of all profits. No trend, you're not going to make a nickel. But trend is a function of time. So the time you're in the trade, it gives you more opportunity for trend, which is why day traders have the deck stacked against them. Time runs out at the end of every day. They cannot catch a big move. So they have to bet large to make a lot of money. My game is to bet small. And if I lose, then I can only lose small. Whereas if I catch a trend move, I can catch a substantial profit because I have time in my favor. So your time frame is part of your risk management. And the overall underwriting rule is really bet small to win big. You have to bet a correct amount based on your system. But even at that, as I mentioned earlier, if your emotions don't allow you to handle a $50,000 loss and you're trading $1 million account, whatever, if your emotions don't let you handle that, you can't make that size of a bet. It isn't just the math of it. You've got to actually have an emotional quotient on what risk you can emotionally handle, and then strive to find where that optimal F is that Ralph Vince has written about.
Yeah, Ralph was on the show. Ralph is a really interesting guy. I'd love to meet him in person. He was awesome.
He's the smartest guy I've ever met. I've met a lot of brilliant people. I don't know if you're aware of, you've probably read Ralph's books. Ralph never took a class in math.
Yeah, it's amazing.
That's all self-learned. He's amazing and just a great guy. Just had a lot of good times together.
Let me keep going on the money management though, because I think let's phrase it this way. I've done this before at an event, you tell people, you say, listen, okay, you got $100,000. How much are you going to bet on each trade? And I've asked a room of 100 people this before. And it's amazing, the numbers. I mean, you've got people that raise their hand and say, I'm going to bet $10,000 in each trade. They only got $100,000. They're going to bet $10,000 in each trade.
Well, if your emotion can handle it, and I would precede it with that, the maximum bet that I would make would be a 4% risk or $4,000 potential risk in the trade. I think that is the optimal number, all things considered, for most all traders. Probably a 2% is more manageable. And people think, well, I can never make much money with a 2% risk. A couple of years ago, when in Australia, I started a $100,000 account. A year later, it's a little over $1 million. And it was on 2% risk bets. Probably most were 1% risk bets. So you don't have to bet big to win big if you're catching large moves in the marketplace. I think optimally, and I can show mathematically why 4% is about as heavy of a bet as you want to make. Or as a risk, not a bet, but a risk. That's how much, if I'm wrong, I'm going to lose 4% of my account.
And you would consider 4% on the heavy side.
Pardon?
You would consider 4% to the heaviest end that you would go.
Yeah, to the heavy side. And here's why. It's not uncommon for me to have 3 or 4 losing trades in a row. So if I have 4 losing trades in a row at 4%, I'm down about 16-20% of my money with slippage and whatever. And so that's frequently happens in everybody's systems or everybody's trading approaches. So I have to be willing to have an equity drawdown I can live through, not sit through, but actually live emotionally through that. And a 4% risk that's pretty gutsy.
Why don't you talk about the emotions? Because you just said it, living emotionally through it. Somebody's listening and maybe they think they know what you're saying, but do they really know what you're saying? Is it it's the waking up in the morning? Is it you're thinking about it too much? And I'm not saying you, I'm just saying the wrong way to do it. That you're thinking about it during the day. Talk about that, the emotions of it all.
Well, I have a lot of experience in doing the wrong things in the markets, so I'm real qualified to speak on this one. The other things I don't know, but I've done a lot of wrong things in the markets. And I think the underlying thing is the human brain is wired to be right at all costs. So we get into arguments because we want to prove we're right. People kill people on freeways because somebody cut in front of them. We'll be dead right, literally. We just have to be right. And in the markets, you can't be all right all the times. And you have to learn to accept that. And if you can't accept that, you get really frustrated and very angry about the markets and that you're losing, you're not making money. The guy next door, your brother-in-law, is making more money. And it's just, it isn't just the size of the loss. It's the fact that you're losing, and maybe 2, 3, 4 times in a row you lose. And that makes you think you're a loser. And you get in all sorts of emotional traps. I don't know if you're aware, my son's a psychiatrist trained at Johns Hopkins and did an interview with 20 major traders, big-time traders, names you know. And the takeaway from his in-depth personality profiles of all these people is, he's the first person to just interview successful traders. None of these successful traders have really big egos. They're not overly confident people. And that was one of the most important takeaways to me, is that we have this impression that traders are gunslingers and they're totally confident, and those are the losing traders. The winning traders don't have a great deal of inner confidence, and that's why they control risk so much better than guys who think that the God's gift to the markets.
I feel very fortunate to have sat down, talked with, become friends with, shared experiences with some men that have so much market success that their kids, maybe 500 years from now will still be living off the residual. And you're right. Most every one of those people that I've had a chance to be around, names that people would know, they put their pants on exactly the same way. And they just act down to earth. They've had a system, they've had an approach. Maybe there's been a little luck on their side, but they've grinded it out, and they've been at the right place at the right time, and things have taken off. But I find they're just down to earth, very down to earth.
Yeah, you look at a guy like Steve Cohen, who's just, you wouldn't have any idea this is a billionaire, 4 or 5 billionaire type guy, done 30% a year for 30 years in the marketplace, and he doesn't have that persona that the movies have made out, or somebody like Paul Tudor Jones, Ray Dalio. And these guys are pretty much salt of the earth people. And understanding that, I think, helps us to become better traders, to see what the personality profile of winning traders is. Another interesting thing that Jason's book pointed out, his research showed, is that all of these really successful traders found a strategy that fit them. So some are fundamental, some are technical, some don't want a system. Some, if you gave a system to, they could never follow it. But they're really good traders on their own, using their own discretionary ideas in the marketplace. And they had to come to that notion. Some went from going to systems to discretionary. Some went from discretionary, realizing that they had to be a system trader. Your personality dictates largely the approach that you should be using in the marketplace. And too often people say, oh, Larry Williams, I'll just follow his stuff, or I'll just get the turtle trading system or whatever, not realizing, does that fit you? You really have to answer that question.
And that's a good question too. What is the definition of fit? And I think that not as much research as your son perhaps, but some of my casual observations is that most of these men they said, well, is this a good opportunity? What's the science behind it? Let's stick with it. Let's execute it. Let's run it like a business. Let's have a profit center. Let's run it like a business. And I think that seems to be a common thread that I've seen in so many of the traders that I've had a chance to sit down with, learn, and interview from.
Well, and I think the ones that you've interviewed, which are legendary traders, they are different than guys like me. They are so much smarter because they're not only great traders, but they put together business enterprises. I'm basically a writer. I have my degree in journalism that turned trader. And these guys are business guys that have put together organizations of thousands of employees underneath them, managing billions of dollars. So not only are they great traders, they are brilliant, absolutely brilliant business people. And there's a real difference between just the trader and somebody who can make a business out of the art of trading. I mean, I have so much respect for these people. They are just so far ahead of most of us in terms of just the intellectual qualities of their life. Oh, my gosh. Amazing.
Taking on the responsibility of losing money for other people is not easy.
Not fun.
No, that's not fun at all. Hey, listen, let me shift gears on you a little bit more too. So the idea of markets changing or the conditions in markets changing, I think many times people, maybe new traders, they approach the markets and they get caught up on this word change. So let me ask you, big picture wise, how much has really changed about the condition of markets since you got started to today?
A lot has changed, but it's technical change. It's change in how long it takes news to get disseminated. I'd get the Wall Street Journal 3 days late. The content and the delivery time period of news took much longer. Now it's instantaneous. So that's one thing to deal with. But the big change really is, we've gone to electronic markets. I made fortunes off the opening gap from the day close to the next day's open. And because we had a time period of, 10 hours, 12 hours where nothing was happening, well, we don't have that gap anymore. So I had to seriously alter a lot of my trading styles because I didn't have that opportunity to take advantage of anymore. So that's a huge, huge change in terms of my trading. But I still think supply and demand drives the markets, and the technical emotions are really technical, I think, measures emotions. The wiggles and waves as we go from point A to point B are technical. The overall trend from A to B is fundamental. And those emotions are still the same. As you know, we can go in any country in the world and look at their markets, and they just look like the markets here, except maybe China because you can't sell short. But the same patterns are there that we see in our markets. So these aren't chart patterns. These are patterns of emotion. And we're all humans. We all have fear, greed. Doesn't matter what your culture is. So that stays the same. How we trade markets, we're all electronic. There's a lot more traders now, so they're a little more emotional. That's a change, but not the core fundamentals. Those haven't changed.
Let me shift gears on you again. Since you've seen everything, so I'm just going to keep asking questions. So in the last couple of years, and I had a hedge fund buddy of mine call me recently, and he was having a conversation with a fund manager friend of his, and they were talking about volumes in Chicago, and they were talking about MF Global, and they were talking about a VIX, at least until the last month or so, has been non-existent. And they were also talking about London, and they were talking about funds, big U.S. funds moving offshore, and Dodd-Frank and QE. So is there something structurally going on that maybe has kind of come out of the two-headed monster of MF Global and current QE policy that is possibly changing the structure or the trust in the markets, the commodity markets that you've known since you're a young man?
Yeah, the trust is, I think, the big thing. The EDF Man fiasco, and then Russ Wassendorf, that's another great fiasco where the regulatory people won't take responsibility for not regulating who they should have. A lot of people are going, the commodities are as risky as I was told they were. And so I think we've dried up some of that. There's been some shrinkage, but there's been this whole expansion of the Forex or FX market. And that actually concerns me a great deal because so many Forex people are saying you can open an account with a credit card. You only need $200 to trade, and we'll give you 100-to-1 margin. I have more respect for people selling crack cocaine on a street corner than somebody's going to give you 100-to-1 margin. And it's ridiculous. 100-to-1 margin, you're going to lose all your money at some point. It's just a question of time, this day or tomorrow.
And so we have IRS agents chasing you down, but the 100-to-1 FX margin guys, as long as I can remember, have been promoting that as a legitimate investing type opportunity, and the regulators just stare in other directions, I guess.
Yeah, well, and I think they're changing it now. You can only offer 50-to-1 or something like that, but it's all ridiculous. Like, oh my gosh, and your commission is higher there than it is in the Globex or the ICE. So, but it's all a promotional thing. And I guess that's another thing that never changes. You always have these guys out there. You always have humans are greedy and want to make a lot of money, and you have guys who will pander to that, whether it's internet marketing or whether it's Forex or commodity trading or stock investing. There's always somebody there to indicate maybe you can make money quickly. You can raise red worms in your backyard and sell them to fishermen. There's always somebody with a deal for you.
Indicators, something that is near and dear to you, and many indicators with your name affixed to them. I think a lot of people starting out in the markets, when they first learn of technical analysis or trend type trading, they see these indicators, they get excited. And once they get what it is, and then the next thing you know, you've got a chart that looks like hieroglyphics on there. There's so many things going on that it's just destined to not work, but they don't necessarily see that. Why don't you talk about the idea of KISS, keeping it simple, stupid, so to speak?
Well, I think it's really important that because all these indicators are really redundant. For the most part, if you look at the Bollinger Bands percentage or Williams percent or RSI or stochastic, they all look almost exactly the same. I've done presentations on this. There's not an ounce bit of difference worth between them. Yet guys will have all these indicators or gals on their screens, and they're just redundant. And they are actually redundant of price because they're based on price. When I took logic in college, my professor, Albert Castell, said you cannot predict A with A. You have to use B, C, or D to predict A, but we're using price to predict price. And there are some aspects of price maybe we can look at that are helpful, but there's so many indicators that you don't know what to say. So I think you need to break down your indicators into a couple categories: the fundamental ones, the emotional ones, and the trend ones. And then whittle those down to as few of those as possible. Then you have a sensible approach. I only, on my charts, I have 3-4 indicators on my charts. That's it.
Yeah, I think for some new traders starting out, that might seem foreign, but I think it's good for them to hear simplicity.
Well, there's no perfect indicator. I mean, I've got some really great indicators, and they don't work a lot of the times.
Yeah,
they work often enough, but you just because somebody, as you know, people will show indicators in books. And in an uptrending market, all this stuff works, but markets don't always trend, and they never show in the books the bad aspects of this stuff. So everything looks perfect, and then you start trading it, and you run into reality that actually a divergence in an oscillator may be very bullish, but the books say it's very bearish. So you got to be so careful. As Ronald Reagan said, trust but verify.
Yes, and I actually he said that in regards to Gorbachev, did he not?
Yes, yeah, in Russia, yeah.
I had a chance to meet Gorbachev once. That was interesting.
Oh, how cool!
Yeah. Well, let me. I want to kind of wind down with you and maybe talk a little bit, because I want to get some of your perspective, big picture. Look, we're going to go ahead and give your website address and where everybody can reach out to you. But I think ultimately, some of the most important aspects of being a trader, an entrepreneur, somebody that just wants to get ahead, there's just certain personal ways that make a lot of sense to be. And I know clearly by your bio, you've been a fighter. You've definitely fought fights. I'm curious, when you look back in hindsight, do you regret any of your fights, or do you feel like those fights shaped you and gave you wisdom today by going through those experiences?
Oh, I'm certain there's one or two I would regret. I can't recall them. But I think that the temperament of the Montana idea of, if you're right, you stand up for it. And if you get beat up, so what? You stood up for what you believed in. And I think that actually helps in trading, because you're willing to take a position. A namby-pamby guy who will run from a fight won't take a position in the market. Paul Tudor Jones was a boxer. So many of these traders have been in an aggressive form of something along the way. Charlie DeFrancesco, the largest bond trader in the history of the world, was a great football player. I was a mediocre football player in college. He was great. And I think that aggressiveness, maybe, or that willing to take a position, it's not aggressiveness, willing to say, yeah, I'm in, I think is actually helpful to trading. That's how I see it, at least.
Well, you mentioned earlier, and I didn't get a chance, I didn't follow up on it, but you mentioned the idea of Montana and the bucking bronco. And I was thinking to the big city kid, or frankly, even worse, the suburban kid, the suburban fast food kid. But here you grow up in Montana, the idea of a bucking bronco, by its very nature, is you are going to get tossed off, and you're actually you're judged by getting back on. And I think in a society these days where every headline is, or it seems like a lot of headlines are, banning dodgeball. I saw a headline the other day, a little kid apparently, and I'm not condoning any kind of violence, but I did this as a kid. All little boys do this. He held up his hand. He made like a gun symbol. He was like 7 years old, and they suspended him for school for a year. And I think there is I think there's a neutering of society going on, Larry. That's frankly frightening. Like what is happening to us that we think everything is supposed to go in a straight line, and everybody is wearing like some kind of padded suit, and there could be no injury. Doesn't injury teach us something?
Yeah, I couldn't agree more with that. We've tried to have this pasteurized, homogenized society where everybody knows what's best for us. And even if they're right, we never really learn it on our own. I mean, you can read something in a book, but until you experience it, you don't really know it. So, yeah, to get tossed off a horse or get tossed off a bike or a car, or do stupid things as I did, as I'm certain you did, as we all do, that was a phenomenal learning experience. And we don't get that much anymore because we're protected. That's a societal change that we're trying to transition through on part of some political people, and the other people are resisting it. That the best learning is from your experience. And certainly Michael Bloomberg saying you can't have a large Slurpee. I mean, come on, Michael. That people will actually rebel at that and have more of them, or they'll order 2 or 3 large Cokes instead of where they would have just had one. So, yeah, it's sad to see. And I think that may be why more people are coming into trading. I've seen really 2 interesting things. People do want some place where there is some exposure to risk and opportunity. And it used to be, when I lectured on commodities around America in, say, the 60s and the 70s, it was all middle-aged white male. And about 1980, that started to change, and the people coming in were younger, some female, still not very many, and a lot of first-generation Americans from Germany, from Italy, from India, from Mexico. Suddenly there was a shift. The risk takers in America were no longer Americans. They were first-generation new Americans. They were the ones that wanted to risk. And that really just was a real wake-up call, like, wow, the people that want to risk are the new generation, not the old generation. You still see a lot of that.
Yeah. You were mentioning about silly things in the youth, and I was just recalling that one of my favorite experiences growing up, I was probably 19, was waking up the next morning and having 2 black eyes, not one, having two, and that actually, I don't know how many guys can actually say they woke up and had two, which means I didn't win, but I learned a lot, and I did hurt one guy in the bottom of the pile. But and I was just on a really kind of more simple level. I should tell you about crossing the street in Saigon. So it's a city of 10 million people. There's 5 million motorbikes. When you cross the street in Saigon, you look left, you look right. You look left, you look straight. You look right, you look left again. You look right. You don't ever stop looking. The risk doesn't stop. And I think that's kind of what you're getting at, is that maybe there's a desire for people kind of, there's a certain segment of the population realizes that frankly, the nanny state is not fun. It's not fun to be put into a padded uniform.
Yeah, all gray is not a pretty color. Sounds like a great place to raise commodity traders. You got to look and be aware of that much.
Look, and I've mentioned this on some of my other podcasts. I was speaking earlier this spring in mainland China, and I have to tell you, sometimes people think that Westerners will say about the Chinese, their religion is money. I can report with firsthand experience, the mainland Chinese tell you that their religion is money. They don't beat around. I mean, they say we are going for it.
Yeah, it's certainly changed. I was first in China in the late 1970s, and everybody that was there wanted me to bring them home to America. And now, when I go to China, I've had 3 or 4 books in Chinese. They want to buy a house from me and have me come live there. I spoke at their Stanford unit, their comparable Stanford lecture there. It's totally changed now that it's opened up, and they really are about making money, which really means they want more freedom, because that's what money buys you ultimately, is freedom, nicer lifestyle, a freedom to live a nicer lifestyle. And they really want that, and they are working so hard for it.
Yeah.
Amazing opportunities there.
I remember walking down the street this spring, and I passed a basketball court, outdoor court, and there was a bunch of young guys, probably 17 to 22, playing hoops. And I mean, these guys were 6'1", 6'4", all wearing sweatpants, running around dunking. And I was thinking to myself, I don't think a lot of Americans realize that they're handing out milk and meat here these days. And I would tell the Chinese, I said, I said, you guys remind me a lot, and some of these speeches, you remind me a lot of Americans, because in America, American likes to everyone say, hey, we're number one. Well, I'll tell you what, the Chinese view themselves as number one too. And anybody that thinks that it's just an American playing field and it's not global today, I don't know how to convince you.
Well, yeah, that's a great point. It has become more global. And I think in part because America, part of our leadership is backed away from wanting to be number one. We don't want to be number one. We certainly don't have a policy of that anymore. It's, well, we have to be fair to everybody, and we've been colonialists all these years, and we shouldn't be number one. Like, what a stupid attitude. I mean, I don't care if you're Taiwanese or you're a Singaporean or an Indian, your country should be number one for you. You have a right to earn that position. And for some reason, so many people here have just backed off from that.
Yeah, it's interesting. It's interesting that we're talking today with some of your political background, and I had caught some this morning that they were having the great political debates in D.C. about debt ceilings and whatnot. And let me end up with that. Let me let you kind of describe, if you're willing, how do you see, and I think your politics these days is mostly libertarian. Is that correct?
Very correct.
So if you were to give advice to somebody, and because look, I know that if I say the word libertarian, which is where I kind of think of myself, most people will kind of in America give you kind of a slanted eye, like, well, what's that? And still, but why do you consider yourself libertarian, and what are the advantages for you philosophically? How did you get to that point? I know I've covered a lot of ground today, Larry, but you got a lot of experiences. I'm sorry I'm going everywhere.
No, that's fine. It's made it enjoyable. I got to that point because I was tired of seeing politics of either persuasion having a Band-Aid philosophy. Oh, there's a problem, we'll put this Band-Aid on it, which is usually more money. But there was no thinking or theory behind why these things were done. Libertarians, whether you agree with them or not, they are consistent in their approach to government. I've known Ron Paul for 35 years. His views today are the same views he had 35 years ago. He is consistent. And I may or may not agree with him on everything, but I know exactly what I'm getting with him. I don't know exactly what I'm getting with most Republicans and most Democrats because they're all over the board. It's whatever panders to people that are going to vote for them or give them money. That's the driving force of their political theory. And I really like to see some consistency in government and how we need government. We need it to do certain functions, and it just needs to be done on a consistent basis. So we understand the limitations of government, as we've talked about earlier, and the greatness of government. And I think that's what libertarians offer is consistency. Might disagree with them, but you know where they're going to stand on the issues.
Yeah, I couldn't agree more. Hey, Larry, where can the audience, and obviously the audience is going to already know where to find you, but where is the best place for them to go connect with you? Your website, your Twitter, Facebook, where do you want people to best be directed?
Well, at 71 years of age, I don't want any more friends. I'm trying to lose some of the ones I have right now. So I have no Twitter.
You don't hold on. Does that mean you don't want anyone showing up at the Virgin Islands, knocking your door and saying they're going to take you to lunch? You don't want any of that?
We've had that happen. But the best place is our website, ireallytrade.com, because even as an old man, I still really trade. So ireallytrade.com. There's a lot of stuff there, a lot of free stuff, and we're not much into marketing anymore, but that's the best place to reach me.
Okay. Well, how is the? Well, I've been to St. Thomas, but
I can see it across off my out of my window. I can see St. Thomas today.
How's the weather today?
The weather's beautiful. We kind of live in perpetual summer. The tax code here is so great. If you qualify, your state, federal, and local tax is 4%. It's at 3.9. We call it 4%. So there's a lot of traders that have moved here, publishers that moved here, a lot of software companies, because 4% state and federal tax is a heck of an advantage. So it's an interesting community. Yeah,
I was down a couple years ago speaking with some guys that had set up shop down there. Yeah, it's definitely interesting. Well, listen, Larry, it was great. I appreciate you coming on today and offering all kinds of perspective.
Well, I am honored to be on your show, Michael. Thank you so very much for having me.
Well, I appreciate it. Look, people. I think it helps so many people to hear. I mean, they can always hear me rambling on about whatever, but I think when they hear different perspectives, people that have led interesting lives, people that have taken chances, take risks, it can only help other people to say, hey, hold on, I don't have to just sit in an office cube for my whole life. I can go do something. And so I think you've definitely done a lot of different experiences, and I hope people learn from that.
I hope so too. And that is a wonderful thing about trading is the lifestyle that it can create. If you want to make a big business out of it, like some of the guys we've mentioned, or you want to be like I am, kind of a free spirit, do a bunch of crazy things, you can do that. It leaves the canvas wide open for you to paint the picture because you have control of your life as a successful trader, not a boss, not a company.
Yeah. Larry, once again, thank you. And hopefully we will talk again on the podcast.
I look forward to that. Thanks so very much.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.